Hello, and welcome to the Business Behind Small Business, the show that reminds you that just because you own a business doesn't mean you are a business owner. In each episode, we will discuss common issues small businesses face and offer tips and advice from the perspectives of two business owners, one that is built to sell and one that is built to inherit. We are your hosts, Sevana Stone and Tiffany Ko. There's a lot of business behind small business, so let's get to it. When you start a company, you don't realize how much really goes into running it until you're in the thick of it, right? One of the most important parts of having a successful business is the money going out and the money coming in. Seems pretty elementary, but you'd be surprised, or maybe not, at how many businesses don't put as much focus into the books as they should. Taxes get filed incorrectly, if at all, and oftentimes most business owners don't know what kind of reports to ask for or what reporting even means. This is why our topic is so important. Let's get talking about the difference between a bookkeeper, accountant, and CPA, and when you'll need any and each one. Before we begin, please note our disclaimer. This is available in both our show notes and on our website and should be referred to before and or after this podcast.
So I'll start by kind of divvying out what the difference is between a bookkeeper, an accountant, and CPA. Now, I think things get a little fuzzy because, well, let's just say if we start from like the way it's organized, let's say CPA comes first, then accountant, and then bookkeeper. It's odd because it's not always based on like level of experience, because a CPA can be both an accountant and a bookkeeper. And an accountant can also be a bookkeeper, although not always a CPA. And bookkeepers typically have a very specific set of focus and jobs that they do that doesn't allow them to be an accountant or a CPA. So let's start with what exactly does a bookkeeper do? So the thing about bookkeeping is it doesn't require any formal training. But the important part about a bookkeeper is they really are the ones that are responsible for inputting the data into your accounting system or on your books. So it's all the stuff that comes in and out of your bank accounts, your credit card accounts, making sure that it gets into your QuickBooks or your FreshBooks or whatever accounting software that you're using. They may be the ones that are actually processing like your accounts payable and paying the bills for you. They may be the one putting together your invoices and making sure those invoices get sent out to your customers. And they probably are the ones that kind of creates like an initial draft of what your financial reports are. And so it's incredibly important to have a good bookkeeper because, the old saying is, what is it? Garbage in and garbage out, right? So if they're not putting in good information, most likely the information you're getting on the other end, which is your financial reports, is also going to be garbage. Now, when it comes to accountants are different than bookkeepers in a sense that their primary focus and what they do is probably a little bit more analytical than just inputting data at its basics. Now, doesn't mean that an accountant can't do bookkeeping work. In fact, a lot of accountants do bookkeeping work. But on top of that, accountants also do other things like maybe they'll prepare your financial statements a little bit differently. For some of our listeners out there, you probably heard the difference between cash basis financial reports and accrual basis financial reports. Oftentimes, accountants are the ones that are making what we call those accrual entries to get those financial reports up to accrual basis. They may be the ones also helping file some tax returns. So maybe like your state returns, your sales tax returns. A lot of times accountants do that. They take a look at maybe your process for inputting all the information and making sure that process is correct. They'll also look at your financials as a whole before presenting it to you as a business owner, taking a look to see if there's any discrepancies or doing some light analysis on it to really explain why the numbers are the way they are. And then if you have auditors that needs to work with your company or do an audit on your books, typically accountants are the ones that are forward facing with them. Now, like I said, again, doesn't mean that accountants can't do bookkeeping work. Sometimes you'll find that they do both, but typically it's more common that you wouldn't find a bookkeeper doing doing the works that accountants do. Now, the next type of service is also, or type of professional rather, is CPAs. Now, CPAs are different because they have a very clear line drawn, meaning that they actually have to pass a CPA exam to be a licensed CPA. Now, I don't know what the CPA exam is like now, but it's probably still as horrendous as it used to be because it's a very long and very complex and very arduous exam that you have to take, where you need to make sure that you not only pass the exam, but every year you have these continuing educations you have to take to kind of make sure you keep up with what the recent standards are and really understand the details of certain like guidances and accounting and whatnot. And so CPAs are the ones that typically you find on in accounting firms that do like audit work, right? So most of the time they have to be a CPA to do that type of work, or they're kind of training to be a CPA. They also can make sure that a lot of times they're brought in to make sure that your financial reports are up to GAAP compliance. So GAAP compliance, again, it's not like you have to be a CPA to do that. You can be an accountant to do that as well. It's just that CPAs tend to be a little bit more closely aligned to that because it has to do with compliance work. They are also a lot of times the ones that also sit down with the IRS, which is a great place to be, I'm sure. So if the IRS is doing an audit, a lot of times you'll find that CPAs will be facing with them. Now, the thing about that is accounts can do that too. Again, it's just like audits, CPAs are just a little bit closely aligned with that kind of work. And CPAs also do a lot of analysis on your financials. And then there's also positions where you'll probably find CPA, like more positions like controllership or CFOs that are oftentimes CPAs. Not always, but a lot of times you'll find that CPAs tend to be finding themselves in that role. If we kind of think about the same way as to what type of roles would be like in like qualifies as like those who are accountants. Oftentimes you'll find staff accountants are typically in like roles that'll fall under accountants, or like accounting managers in a company. And then in bookkeeping, of course, you'll have bookkeepers in there. And then you'll also have people who are oftentimes like AP or accounts payable specialists, AR, accounts receivable specialists. Oftentimes you also find payroll specialists that kind of fall under the title of bookkeeper. So that's kind of like a quick overview as to what the three different types of roles that we're talking about today. So I think that at the end of the day, I feel like it all kind of comes out to be a big jumble. Bookkeepers, CPAs, accountants, it just becomes really confusing in there. And like I said, it's because everybody kind of jumps around and does a little bit of everything. I think the biggest distinguishment is that with CPAs, like I said, you have that exam. You kind of have to take the exam in order to use the CPA title. They're pretty stringent about the fact that you have to take the exam and that you have to do the CPEs if you ever want to keep that title around. So there's just a lot more there's a lot more standards that they have to be held to. Plus, like, CPAs also have to, what do they have to do? Like every year they have to like take ethics courses. There's certain guidelines they have to abide that. There's certain things that they can and cannot do. And it's kind of clearly written in black and white. And so that's really the mark of a CPA, right? So you can't just like, hang your shingles out there and be like, hey, I'm a CPA today because I feel like it.
Right.
Now, I don't know if this is naturally the case, but I like to say that the difference between accountants and bookkeepers, because I've met some amazing bookkeepers who can do things that accountants don't always do either, right? It's just through like years of experience and whatnot. So I hate to say that it's either a knowledge standard or an experience standard that sets them apart. But I would like to say that maybe the only difference is the fact that accountants tend to have gone to school for accounting and they have an accounting degree. And typically they'll, call themselves accountants. But it's not to say that as a bookkeeper, you can't be just as experienced or just as knowledgeable as an accountant. But I feel like the difference is just one went to school for it and the other one didn't.
Yeah. So like I think the way I normally describe it is that an accountant can be a bookkeeper, but a bookkeeper can't always be an accountant.
Yep.
And
Accountant can be a bookkeeper, bookkeeper can be
could be a bookkeeper and an accountant, but
and
neither a bookkeeper nor an accountant can be a CPA unless they become
pass
a
the
CPA.
exam.
Yes.
That's right.
Yes. So as to not confuse people further.
Well, we just like to confirm the fact that it's a confusing world.
It really is. I mean, it's numbers. Come on. Okay, so the question I get asked often, which I should find offensive, but I don't, is why do I need a bookkeeper? So many business owners. I do, and it's
Is
crazy.
that
And I'm
because they
going,
want to do it themselves? Is that the
oh
context of the
yeah.
question?
Yeah. So, I mean, to be honest, like even if somebody is a bookkeeper and they've been a bookkeeper for 30 years, doesn't mean that they can do accounting. And just because somebody says that they have an accounting degree doesn't mean that they can do bookkeeping. It is not an automatic pass into the ability to be able to do something. It's like, I don't know, it's like if a doctor were to say, well, I'm a doctor, I could totally do that. And it's like, yeah, but what kind of doctor are you? Right? Like, you don't want your general practitioner giving you a colonoscopy. That's all I'm saying. So,
Okay, in line with the same thing, I think my favorite line that I've received a lot before is I have an MBA, so
yeah, yeah.
of course I can do my own bookkeeping.
No, totally. Yeah. Oh, yeah. I mean, and that's again, it goes back to what I said. Like, just because you have the schooling in it, and maybe you even have some experience in it, if you have not been doing it on a daily basis for a long period of time, I would highly suggest you hire someone who has. And I'm going to get into that. So, there's a lot of business owners, to your point, that say with because they have a finance degree or whatever it is that they can do their own bookkeeping, or oftentimes they will rope their significant other into doing it, right? And I mean, I get it, I do. And sometimes that significant other is somebody who's like, I have an MBA, or like I did bookkeeping in when I was in high school, whatever. Um, you don't want to pay for someone else to do something you could do yourself or rope your significant other into doing. But I don't think you should, nor do I believe any owner of their business should do their own bookkeeping. And here's why. For one, liability. If you or your special someone make a mistake, do you know how to fix it? Do you know how to find it? And most importantly, do you have the insurance to protect you from your mistakes? If you say no, you need to hire a proper insured bookkeeper. And I will straddle that with an example of us currently working on a mistake that was found deeply buried from 2 years ago for a client that has quite strongly adversely affected their taxes. I won't go
Ouch.
into I won't go into the details of it, but it was a mistake that was made by a person who worked for them at the time. Again, I have a finance degree, and they were doing it in interior. Anyway, it's a costly mistake. Second, can you really afford doing it yourself? Is your time really worth it? Think about that. I want you to really, truly think about this, because if you were to break down your income into hourly, would you say you make less than an average bookkeeper? Would you also say you take less time than an average bookkeeper to keep the books? If you say no, well, you know what I'm going to tell you. Hire somebody. Third, can you really give yourself the same type of transparent bias an outsider would give you? A bookkeeper is in your books every day or week, and they know how to spot the red flags of your transactions. They know your budget and will have your back if they think you could either save money or are about to be upside down with your money, or maybe even need to pay someone money. Can you really be that blunt with yourself? And will you listen to yourself as well, or your significant other even? Do you really know all the things there are to look for within your financials? If you're familiar with the top and the bottom and don't pay attention to the red flags that can appear in between of your profit and loss, then you need to hire a bookkeeper. Okay, so let's say you've heeded my advice and you've hired a bookkeeping company, which I recommend over a singular bookkeeper. This is my other argument is
Pet
that,
peeve. Oh.
yeah, well, pet peeve as well, but also my argument that they likely have a higher the firm will likely have a higher liability insurance and will have quality control processes that a singular
That's
bookkeeper
true.
is not going to have.
Well, you
A
can't
si-
have because
no, they can't
you
have
can't
because
have
they're the only
control
one.
of one person. Yeah, when you
Yes.
only have one person team, it has to be more than one.
Absolutely, absolutely. Because even the best person is potentially going to make a mistake, or they're just not going to find. They're not going to uncover things. Um, they just have each other's back. Anyway, well,
Hmm.
so are you going to need an accountant? Maybe. We know that a bookkeeper's role is to record transactions and keep you financially organized, while accountants provide consultation, analysis, and are more qualified to advise on tax matters. Accountants will also provide higher level reporting, and they'll have a more sophisticated view that your company may need. The thing is, many bookkeepers are actually accountants doing bookkeeping. In my company, most of my bookkeepers are actually accountants for this reason. When a client needs higher level reporting, we're able to do that. If you choose to go with a bookkeeping company, you may want to ask for an accountant or for the credentials of the bookkeeper to determine if that person can grow with your business, because you don't want to hire a bookkeeper, even if it's a singular bookkeeper, and then have to hire again if your company explodes in growth, or even if it doesn't, if it takes like 5 years, you're still going to have to hire someone. Accountants are important when your business is bigger or complicated. Now, you will need a CPA to file your taxes and to advise you as your business grows. Period, point, stop. Do not, I repeat, do not file your own tax returns, no matter how confident you are in your own abilities. I have had a CPA since I was 16 years old. And the reason for that is because I don't want to have to, I don't want to make the mistake. I'd much rather he make the mistake. Rules are also changing all of the time. And CPAs are required to take classes and be up to date constantly. Like you said, I mean, there's CPEs, there's this education that they have to do. If you yourself are not a current CPA, like up to date with all of your classes and your education and all of that, then please find someone else to do them. So the question is, when do you need who, right? I mean, that's what we're talking about. Start your company off with a bookkeeper. Even if your company is small, hire a bookkeeping company that will charge you hourly. If you're small, the cost will be nominal. It's completely worth it. As the company grows and your company structure changes, make sure your bookkeeper is sophisticated enough to grow with you. If not, make sure you hire a firm or company that has bookkeepers that are accountants. Now, no offense to TurboTax or those other fast tax companies, but I really don't advise using them. They train their employees to do data entry. They often do not have the current knowledge in taxes or bookkeeping your company deserves. I'm not saying that it's everybody, but majority of them. So do yourself and your company a favor and hire a bookkeeper right now, hire a CPA after that, and do some research to find the accountant that's right for you. So, in saying that, uh, I have the perspective of someone who intends on either bequeathing my company to one of my children or perhaps to a key man. Either way, I'm in it for the long
Mhm.
haul. And you are an entrepreneur who has sold and intends to create businesses to sell. So you tell
Right.
me, what are your thoughts on a company that is selling? Do they need
Yeah.
all three? Why or why
Yeah.
not?
Well, one, can you afford all three, right? But when we say all three, though, just keep in mind that in this day and age, luckily, because of all the entrepreneurship that's around, there's a lot of fractional
Oh,
support.
yeah.
So, kind of your company, Savannah, where you offer
Mhm.
fractional support. Sometimes you go probably as much as a full time support, but people
Yeah,
hire you because your people are dependable. It's a firm, there's knowledge there that's worth it.
for sure.
Not every company probably needs a full time support of all three unless
Yes.
you're sizable. So, when I say sizable, if we're talking about revenue dollars, I would say that you probably have to be in a good 8 digits to be sizable enough to have three full time individuals for each of those
Yes.
positions.
Agreed.
Now, that's kind of just a approximate, right? If you're in a business where you have high volume of transactions, right? Maybe it's not high dollar, but it's a high volume of transactions, then you might get there a little sooner, right? Because there's just that many more things to record keep for. And maybe you are a 7 figure business and you do need all three. Now, it's pretty rare that you need a full time CPA.
No,
Usually
yeah.
CPAs are yeah, usually CPAs are fractional consultative, kind of relationship. I'm not surprised that if you are looking to set your business up to sell, that It's more likely when you're selling it, you probably have a full-time bookkeeper, a full-time accountant, if you're again in that 8-figure range and above, and you probably have a close relationship with your CPA. And the way that works is, if you think about whether you, let's say you want to sell it in, I don't know, 5 years time, your business in 5 years time, right? Having that great bookkeeper, even if it is an accountant, I don't really care, as long as somebody's doing the bookkeeping duties there, like that's super important. Because if you're going to sell your business, one of the things they're going to ask you for, of course, as the buyer, is, hey, let's see your financials. Let's see how your business is doing. Let's look at the story of your business. Show me the last 3 years. I want to know, how much have you sold? How much have you grown? What are your pain points? What you're spending the most money on? How much of your margins are there? How much are you making for each sale? Like, there's a lot of information they expect to extract from your financials. And if your bookkeeper isn't granular enough or detail oriented enough to capture the right details, you're going to find yourself in a position which, I have to say a lot of companies do, is you find yourself in a position where you're ready for a buyer, or you're ready for a PE firm to eat you up or invest in you, right? You're ready, but then you can't produce the financials they're looking for. And then now you have to probably scramble a little bit, if not dig into the past 2 to 3 years history to kind of repiece all that together. And I will tell you that repiecing history like that is incredibly hard. Just think about it. Think about having to pull out your bank statements from 3 years ago, or remember why you made that counter deposit from 3 years ago, or remember which customer paid what invoice at what time 3 years ago, or what period of time did that expense cover from 3 years ago. Like, it's not easy. It's
Mhm.
it's time consuming, it's costly, and honestly completely avoidable if you put some value in hiring the right bookkeeper and the right accountant from the start. Now,
Right.
you probably will end up with a full-time bookkeeper before you will with an accountant, unless you combine the two, which is up to you. That could happen
Yeah.
sometimes. But at some point, usually you'll get busy enough where bookkeeper, like, you need to segregate those duties, in a sense that you
Mhm.
need somebody who's focused on just the data input, making sure the data gets in with the right level of detail and is very precise on that level. And then you need an accountant to kind of shore up the other end, where they're looking at the bigger picture. They're looking at all the data that comes in, seeing if it's actually in the right accounts in the right period of time. And making sure that the financial reports you have on a monthly basis actually tells the story of your business for that month. And that's really more from an accounting perspective. So yes, you can have somebody to do, like, one person to do both, but it's kind of like, how do you check your own work if you're the one doing it, right? You can't check your own work, really. And so I would say that for any company who's ready to sell, especially if they're above the 7-figure mark, you probably will, at the very least, have those two roles completely filled in your business and your organization.
Mhm. I've set up my company and I run my company as though it will be sold, because in reality, even if okay, let's say one of my children were to take over the company in 15 years. Let's say that happens. It's like a sale. It's an internal sale, if you will. So I have to make sure that they understand the books. My intention is, if one of my children shows interest in my company, my intention is to bring them in um, to the financial conversation 5 years prior to me leaving, because I want them to understand the mechanics of our financials. And I do have a conversation with my CPA pretty often. I feel like I talk to him. Um, yeah, my financial advisor. So I have financial conversations probably every other month, probably every other month, just to make sure that I'm doing all the right things and I'm moving in the right direction. Granted, I'm a little different because I understand all the vernacular. I understand the bookkeeping. I understand accounting. So it's a little different for me because I am in books every day. I am in an accounting role every day. So, but I don't expect other people to be. I do highly suggest that if your company is not in that role, that you start to learn what those words mean. If your intention is to retire, because that's what would happen, right? In an inheritable company, you're going to be retiring. So I highly suggest that if your intention is to retire in 10 years, I don't feel like 5 years is even long enough. 10 years, because you're going to need all that data to follow 5 years in, bring in the person that you're intending on leaving the company to. And then I also highly suggest that you, um, well, I mean, I guess in the 5 years prior to you leaving, that's your opportunity to watch over them. But I'd give yourself 2 years to watch over and be basically the consultant of your own company, so that this, especially if you're still working with the same CPA and the same accountant, which they will be fractional. The bookkeeper likely would be the only one that's full time. But everyone has to make sure that they're on the same page, but also that there's enough accumulative data of your financials and the mechanics of those financials, so that when you do step out, that's not going to become the downfall of your generational company.
So I think it's interesting too, because I think really in a company, the duties really just fall between either bookkeeping duties or accounting duties, right?
Yeah, for
Like you
sure.
can call the person sitting in that role whatever. And to be quite honest, we've said it too, you can be a licensed CPA doing bookkeeping duties.
Mhm,
Doesn't
mhm,
matter. In fact, great, good for you, right?
mhm,
But I think in the company you can't get away whether you're holding it for legacy purposes or selling it, get away without having those two roles, a bookkeeping role and accounting role, fulfilled.
mhm.
Now, CPA is interesting, right? Because people who go above and beyond and get a CPA who doesn't go into what they call public accounting. So, public accounting would be like the Deloittes of the world, the
Yeah.
Ernest Youngs of the world, the KPMGs of the world, where they do work that only CPAs can do, right? Like you literally cannot do certain types of assurance work, which is like audits, reviews, and whatnot. Like you literally cannot sign off on those kind of reports or do that work unless you have this license.
Mhm,
But if you don't decide to go to do that work and you are still a CPA, got your license, then oftentimes you find them in the role of a tax accountant
mhm.
or in the role of a controller or maybe a CFO. Not that you have to be a CPA to be a CFO, because I feel like I probably just offended all of the CFOs out there by saying that. But oftentimes you do find CPAs go for those roles too. And if we talk about the roles you see in a company, like I said, bookkeeping and accounting roles have to be fulfilled. And then as you get big enough, then you do bring in the controller role and you bring in the CFO role.
Yeah.
And yeah. And then those roles could or may not be a CPA, but those roles need to be fulfilled. And it doesn't quite strictly fall into accounting, but it's largely influenced by how your accounting is done.
So those are two things that we didn't really touch upon, but it is important to note that your choices are not just bookkeeper, accountant, CPA. If you're, I mean, I can't speak to selling a company, but I know that at some point I want to bring in a select duty controller. Select duty meaning
Yes.
that they're not going to be controlling all of the things, just controlling some of the things that are the most important in my mind. I have an intention on bringing a select duty controller. And I also know that as I get closer to my retirement time, I intend on also having a fractional CFO to be a part of the conversation as well. So, that to me, bringing in a CFO, bringing in a controller, to me is more important to the real time financials and the real time delicacies of financials than say a tax
Mhm.
accountant would be. I think the CPA, it's kind of like the different levels, right? Like the bookkeeper's on ground level, and then like the accountant is
Yeah.
a little is and the accountant's like on the second level story or whatever, looking
Yeah.
down. And then the
Yeah.
CPA is on the terrace. They're all the way at the top. So they don't see all of the everyday mechanics of your company. They
well,
can only speak to the broader part of it. Um, but your bookkeeper is, to me, the most important.
so just to clarify again, anybody in those roles can be a CPA,
Oh yeah, yeah, definitely.
right? Yeah.
For sure.
So
But I
if
mean, like
yeah,
when you're speaking to the role in and of itself.
Right.
So
So like control, like your CFO will probably be the 40,000 view.
yeah, yeah,
Right. They're in the clouds looking down probably.
yeah,
Not
yeah.
even so much the terrorist. The terrorist is probably your controller looking down to make sure that,
Hmm.
things are working from that view. Right. And as your business gets bigger and more complex, you need those levels because you can't be one person doing all of that. You can't be
No.
in the weeds, in the details, at the ground level of inputting these transactions and then wanting to sit on the clouds and also analyze what you did
Oh
as a
yeah.
company
I
as
don't
a
think
whole.
you can
It just
sell a
doesn't work.
company that way. No, I don't think you could even sell a company that. Like, how could you even make a company sellable if you're the only person that they're going to be talking to, right? I kind of feel like
Well,
that.
you also have to be, you would have to be small, right? So if you're a small sale, yeah, you probably don't warrant all these people. And especially if you have some kind of accounting background, like maybe you're degreed yourself or whatever, yeah, you can probably get away with it. But to be quite honest, I think what'll happen is if you do that, if you try to do a sale with that, they're going to ask a separate company to
Yeah.
basically double check everything you did, right? So it's still
Mhm.
going to
Mhm.
cost you on that end, meaning
Mhm.
that they'll get somebody, a third party accounting firm, somebody to verify what you did because they're kind of like, well, I mean, come on, you're a little biased. Like
Mhm.
you see it
Mhm.
from beginning to end. I mean, you can technically cook these books any way you which you want, and
Yeah.
present them to us and say we're doing great. And who's to say that you're not just puffing out your own feathers there?
Mhm.
So yeah, so it's like, do you want the cost now and build it up? And the way I see it is you want the cost now because you're building it up. Plus, you can use that information as you go along and use the accounting data and the financial reports to actually help you grow your business for
Mhm.
a better sale.
Mhm.
Or you can keep doing it yourself, which means you're probably not going to use the data fully, right? And plus, I don't even know how you're going to have the time, to be quite honest, trying to do all this yourself as well as run the business,
Mhm.
right? But then just know that by the time you get to putting your business on a market and somebody's interested, if they hear that, I would say it's pretty likely they're going to be like, well, I need you to go incur the cost to get a third party to verify all your work. So either way, you're spending it.
Yeah. Well, I will say that it is very likely that if your intention is to give your company to the next generation, likely you won't do any of these things. You'll be like, all right, peace out. I'm out of here. That happens all the time. It happens. And all of my family either has is running their fathers, my uncles, businesses, or they have given their company down to their children, to my cousins. So it happens all the time in my family. And to be honest, I feel like the whole Armenian community is just in this incestual business. you know Everybody just runs their family businesses. It's just a thing that we do. However, that to me it would be, I feel like, unfair to my child or children to do that. And and the reason why I say that is because I do know someone who took over their family business, and come to find out the business was so far deep in financial stress that
Yeah.
I don't even know how she did it. It took her 5 years to turn the company around, and 5 years of shaving years off of her own life and losing hair and all the other stresses. But it was this potential moneymaker on the outside, but a money pit on the inside. And with her parents
Hmm.
leaving her with this, they didn't give her a gift; they gave her a nightmare. So that's something that you want to think about, is if you're going to be giving a family member or even a key person in your company, give them a gift. Don't give them a nightmare. And in order to do that, you know you got to hire the right people. Be responsible about it, for goodness
Well,
sake.
same thing if you want to sell your company too. If
Oh
you want to
yeah.
sell it and you want a good sell,
Hmm.
then your company has to be a good sell, meaning that like
Oh
nobody's
yeah.
going to buy your company just so they can buy themselves into another job because
Hmm.
I mean, and the thing is, things like that is reflected on your financial reports. If you know how to put the information in the right way and you know how to use it and read it, and I think that's where it falls on a business owner, is that you need to learn how to use it and read it. You may not have to be the one putting everything in, and you don't have to
Hmm.
be the one doing the actual accounting, but you need to understand the reports on the back end to
Oh
understand
yeah.
how is my company doing, how much is it worth, is somebody going to buy it. and what would they buy it for? And
Mhm.
those things will give you clear indicators of where your business are today. So you know where you're going to go with it to get to where you want to be. And taking those financials or not spending a lot of time with it or trying to save money and costs in the front end by not hiring somebody who is really good at what they do, whether in a bookkeeping role or an accounting role, like you're just doing yourself a disservice at that point.
Yeah, I hate to keep bringing this back to kids, but I just do because that's how my brain works. But it's to me, it's like when people have babies but forget they turn into teenagers. No one ever tells you like what to expect when you're expecting a teenager. They just tell you what to expect when you're expecting a baby. And it's the same thing with a business. Don't get into a business if you cannot commit to the financial responsibilities of it. It's the same as a child. Do not have a child if you are not ready for the emotional distress of having a teenager. And that goes for boys and girls. Anywho.
You know what? I think that'll hit home with a lot of our listeners, especially the parents. But even if you're not a parent, I feel like you can kind of foresee what that would be like.
I mean, it's even with pets. Like if you don't have children and you decide that you want to have a dog. I mean, how many shelters are filled with dogs who I know people who have done that, and it has really rubbed me the wrong way where they get a dog or a cat and they're like, "Oh yeah, I travel a lot. Maybe I shouldn't have had one." And then they take it to the shelter. No, you got to think about not just the beginning of what your business is going to need. You really have to think about what the third quarter is going to look like, the third quarter of the lifespan of your business before you even start your business. And that's why it took me 2 years prior to me starting my company. I thought about all of those things 2 years before I started my company because I wanted to make sure that I was going to be responsible about it. This was going to be my long haul and I wanted to be prepared for it. And did I take classes for it? Heck yeah, I did. Because again, I wanted to be as prepared as I could possibly be and not just be like, look at me, I got a business. No, you have to be prepared for all of the things that your business is going to bring you. So
Well, I
I'm,
started preparing for selling my business, about year 4 into it. So it was about
yeah,
4.5 years before it actually sold.
for sure.
But
Yeah.
it was looking at it through a very critical eye, being honest with myself. Now,
Yeah.
I mean, I had an advantage in a sense that, yes, I knew the financial stuff better, right? So my accounting obviously was spot on because as much as sometimes I didn't want to look at my own reports because I was like, oh, I know
Mhm.
what it's going to look like this month, at least it was a way to keep me honest. And it was a way for me to always have like a black and white like measuring stick that I know that my future buyer is going to measure me on. And that was
For sure.
something that I could see, I can measure, I can work towards. But yeah, I mean, it took a healthy 3 to 4.5 years beforehand. And it
Mhm.
probably would have taken longer. Who knows, right? But
Mhm.
I think both what you and I are saying is start today. Don't
Yeah,
wait.
yeah. Yeah, stop waiting.
That's right.
This isn't a New Year's resolution you should be making. This is a right now resolution. In any case, in each episode, we like to connect a famous example to our discussion to help you relate our talking points on a more global or well recognized scale. Sometimes we use exact examples of either famous persons or successful business owners of today or in history. And sometimes we use examples of people who inspire us and have inspired today's discussion. Take it away, Tiffany.
Well, I'm going to leave the history part to you. I'm going to talk about business owner of today. And this one
Yeah.
is hot on everybody's probably trending news lines or whatnot. So let's talk about FTX, the
Oh, yeah.
Bahamas based cryptocurrency exchange. This has been quite a drama
It
unfolding.
has, hasn't it? It has been keeping us on our toes.
It's literally, and it's so like, you're watching all the news on it and you're like, is this real? Is this guy really for real? Like,
Yeah.
how? So much money, so much money. Oh
Uh-huh.
my gosh. So FTX crypto exchange basically filed Chapter 11 bankruptcy on November 11th, and that's when the CEO, that famous guy, Mr. Bankman Fried, stepped down as CEO, and well, just got arrested yesterday, I believe. Anyways, the Chapter 11 bankruptcy, when it first came out, revealed a number of internal issues at FTX, including the possibility that the company didn't even verify the number of users on this platform and doesn't even possess an accurate list of bank accounts or account signatories. Which is all to say that is very, very bad. That is like the basics. Accounting 101, very basic. Business 101, I don't know, whatever you want to call it. Pretty much it's bad. Now, it also said that, of course, one of the things why this is such an interesting example of this time is you probably heard before that a lot of this came down to really bad bookkeeping that basically left the profit and loss of the company extremely unclear. And of course, lend itself to also a lot of concerns about risk management and business ethics in general. So after the CEO stepped down, the new CEO, John J. Ray III, who was also a key person when it came to reorganizing Enron after the company fell apart, which I don't know how many of our listeners still remember Enron. Maybe our younger ones. Yeah, I think our younger ones are like, I feel like I read that somewhere in a history book, and we're like, we lived it. So he's basically the new CEO, and after kind of getting into it for a little while, he himself said, and I quote, "has never seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred there." Now, Mr. Bankman-Fried was arrested yesterday when he was also due for a hearing in front of Congress. So naturally, he wasn't able to attend, but John J. III did. And his opening statement to Congress was this: FTX Group's collapse appears to stem from the absolute concentration of controls in the hands of a very small group of grossly inexperienced and unsophisticated individuals who fail to implement virtually any of the systems or controls that are necessary for a company that is entrusted with other people's money or assets.
I can't.
Pretty damning opening, huh?
Oh, I can't. How is it that you are in money and you didn't even think that maybe I should have someone else be made? I'm not. Continue.
Oh, and there's more.
I know.
So during the hearing, he also confirmed this. And I quote, because his quotes are so great at this point.
Oh, yeah.
There is no record keeping whatsoever. There's an absence of record keeping. And they use QuickBooks. A multi-billion-dollar company use QuickBooks. Nothing against QuickBooks. It's a very nice tool, just not for a multi-billion-dollar company.
It's like bringing a pencil to a sword fight.
Oh, but one more thing after that, going back to our whole topic about bookkeepers, accountants, and CPAs. Now, it's a multi-billion-dollar company. And naturally, with investors and all this stuff, they had an audit firm. Great. They actually had an audit firm, right? By the way, the audit firm also bills itself as the first accounting firm in the metaverse. Sounds like it's also going to be the last for a little while. But anyways, I'm sure the audit firm probably had some CPAs involved, which is also goes to show that, look, it can all be fallible. You can have all three of those roles and responsibilities filled, but if not with the right people, you still end up in this situation. I can't. I just can't. I just can't. I don't even know. Like the way when the new CEO was kind of like, and they were using QuickBooks, and I just started thinking about, really, like this is where you get all of the wrong things together and it becomes this vortex, right? And I know they keep talking about the bookkeeping and stuff like that, but I think they attack that because that's just the most basic level, right, of a business.
It is.
To come in, guess what he did? Probably the first thing he did was, let me look at all the financials and see what's going on. And then he saw all these things and $8 billion unaccounted for, stuck in some, unnamed account. He's probably like, what in the world is happening here?
But this brings us back to what you and I are harping on. And it brings me back to what I just said. If you intend on opening up a company that deals in cryptocurrency, you know that it's going to make a lot of money. Why would you not first satisfy all of the financial needs of a company that you're about to start and In saying that, why would you not have spoken to someone who would have been like, yeah, maybe QuickBooks is a little too elementary for, the billions of dollars that your company is about to make? I just, again, nothing against QuickBooks, but
Well, so I
majority of
mean, of course,
businesses are not billions of
yeah,
dollars and, are not billion-dollar companies, not million, billion, multi-billion dollar companies. And he's missing multi-billion
right.
dollars. So I don't know. It's just the stupidity level is just obscene. At least with Enron, I kind of feel like a lot of people got gypped, yes, but they got gypped by an extremely intelligent person. This guy, I'm seeing him get interviewed, and he's like, I don't know what happened. Like he looks like he just woke up, and he's like,
He's
I
like,
don't
it was
know.
all unintentional. It was an error, right? But I mean, and that's left to be, I guess, determined in the future, right? Was this like intentional embezzlement or was it not? I mean, I think some of us already kind of formed our judgment there from what it is. But it is I just, oh my gosh. But it is to say that, I mean, I think to be this grotesquely, like, with your record keeping and being this cavalier and this inaccurate about it, I mean, you almost have to try. Right?
Right? And
You kind of
hey,
have to try really hard or just not care. But I mean, regardless of what his intention is, and let's just say, for the sake of argument, he was in it, like, he was like not intentional here, right? He was just also asleep on a job, right?
oh,
I
for
mean, if we want to go
sure.
back to the basics of, look, as the owner, if you don't know enough to even look at your financials to realize, first, I mean, this is a gaping hole, so he should have known. But I'm just saying, like, sake of argument, let's just give him the benefit of the doubt. He wasn't looking at his financials, or he didn't understand what he was looking at, and he never asked the questions.
But you're in money, for God's sake. Like,
So, well, well, let Congress and the judicial system kind of figure that one out. But I did find it a little bit ironic, the fact that the new CEO talked about the fact that he used QuickBooks, and I'm just like, just like you said, QuickBooks is a good tool, right? There's nothing wrong with that tool, right? But certainly not for a multi-billion-dollar company. But it also goes back to the fact that, like, it kind of just popped in my head about how many people sincerely believe, and it's probably the way, this is my one gripe with QuickBooks and Intuit, it's probably the way they market it, is they think if they buy the software, it's going to do all this for them. As in,
right.
automatically. As
Yes.
in, you don't need a bookkeeper, you don't need an accountant, just
Ugh.
buy the software and you can DIY it. And I
Yeah.
promise you that is 100% not the case. And I don't like it that Intuit does that and makes that claim, like, at least they don't make that claim, but it's that implied in a sense that people have picked up on it and they think that's the case.
It's like, I swear, it's like the microwave makes you think you're a chef, and the IKEA makes you think you're a furniture builder. You are none of those things, my friend. QuickBooks is the tool. You still need someone to do it. If you are holding a hammer, could you build a house? Probably not. You still need a carpenter. You still need an architect. You still need,
But
all
that
of X, Y,
company that
and
who
Z.
made the hammer makes you feel like you can.
For God's sake, WebMD does not make you a surgeon. What more can I say? It's just bizarro to me that this guy, I don't know, man. I don't know. I could
Yeah.
go on and
So in this
on.
case, yeah, I mean, in this case, in all likelihood, I can't say that, all of the players involved may be intentionally defrauding everybody, but I
Please,
mean,
please
clearly this
tell
is a
me that they're
failure
stupid.
of
I
controls and
just,
everything all around.
I just want to believe that they were stupid. That's all I want to believe. I will say, I
So
will
let's
say,
go, let's dive into history now that we've talked about the
yes,
present.
yes. But before we do, I do have a question for you.
Okay?
Now, in
Yes.
saying that, you and I have worked with companies that are under a million and above million and even above 10 million. At what point is your opinion at which a company, because we don't know where our listeners are in their businesses, right? Like,
Right.
in your opinion, when do you think our businesses should start considering a more complex or more sophisticated accounting tool, or rather, expecting it from their bookkeeper, expecting it from their accountant? Meaning, so, there are some companies that are on QuickBooks, clients of mine that I'm currently having conversations with and telling them that they should probably move over to something a little more sophisticated like Sage. They
Sure.
don't get into the books. We just do the reports together
Yeah.
with them. But I'm
Yeah.
looking at them and I'm like, this, you guys need more. So when, what is
Yeah.
your
Yeah.
suggestion?
Yeah, and I mean, on my end, just through the company, just through my experience, been involved with a lot, like quite a few transitions of accounting systems, typically away from QuickBooks. We did one into QuickBooks, which was unusual, but typically it's away from QuickBooks into, what they call an ERP system or something like that, right? I mean, the way I warn them is the tool will make it a little bit easier, right? There are some things that the NetSuites of the world or the Sage of the world can do a lot better than QuickBooks, right? QuickBooks is an amazing system and it can kind of keep you going for quite a bit of time. I mean, I've definitely seen solid mid 8-figure business in QuickBooks, and it works perfectly fine. A lot of that also has to do what industry you're in, right? So if you're in a service based industry, I would say QuickBooks will probably keep you going for some time. If you're like in a SaaS industry, you're in a restaurant industry, certainly if you're in a cryptocurrency industry, not so much, because QuickBooks as a tool has its limitations, and it's built for a certain type of business and a certain type of business and also certain level of business. So that being said, if it's all equal, I think that as far as the system goes, and I tell my clients this all the time: look, your system will forever only be as good as the people using it. Somebody has to sit there and type in a transaction. Somebody has to sit there and direct where things go. Somebody has to incur judgment to look at it and say, does this actually look right? And question what it is. So, yes, you can go out and pay the thousands of dollars you have to subscribe to NetSuite or any of the other ERP systems or Sage of the world, but realize that increase in productivity is marginal compared to who's sitting in that chair operating the system. I think if you're over $500,000, you probably want you at that point you definitely want somebody who's more than just a data entry focused type of role. You want somebody who is a little bit more analytical, who's looking at your financials, definitely a bit more sophisticated. And that's also when you probably have enough. Now, again, I'm thinking like a typical $500,000 business. I'm not thinking like a $500,000 business where you only have like 3 transactions in a year. You just have really big, high dollar, like, sales. But if you're, yeah, like a typical for 500,000, I would say that that's where you also start thinking about process and controls. So when you reach 1 million, I would say that you want to separate the two roles, because there is something to the fact that if you separate it, you have more controls, because like we were saying earlier, you can't have control of one person. Like there's no controls you can build in that the one person isn't checking themselves at, right? Which is the anti definition of what a control can be. But I think at 1 million, you definitely need to separate the roles into two different people. Even if it is fractional, it probably should be separated. And then at 1 million, you really do need to start thinking about where your checks and balances are in your process. You may not have all of them because you may not be complicated enough. And there's only two people doing it. So, hey, there's only so much you can do. But you should at least be aware of where those controls are supposed to lie, what's actually a control, what's not. And then as you hit maybe the 3 to 5 million, that's when you really need to look at it and make sure as many of your controls can be in place, because now you're sizable, right? You have enough assets coming through, enough money flowing through, that you kind of want to be careful to make sure, somebody's not skimping off a penny
Right, right,
somewhere.
right. And,
Kind of like office space, right? You start skipping off a penny, it doesn't seem much, but hey, it's going to add up to some time, add up over some time. So that's what I would say. I mean, I find it's rare, although no, I wouldn't even say it's rare, actually. Just kidding. Um, it is pretty often that I see companies in the high 7 figures going into 8 figures or in the low 8 figures, where they're kind of just struggling with this now.
yeah.
Somehow they made it to that level, never really ran into any issues yet. And
Hmm.
so at some point, your business will force you into having that, because otherwise you won't be able to grow, because you'll be strangled by your own patchwork or spaghetti bowl of process you like pulled together, and you'll end up maybe outgrowing the people who are playing those roles because they weren't sophisticated enough to get to that level. It's a different playing field when you're in high 7 figures. You cross over to the 8 figures, and of course, needless to say, when you're in the 9, 10 figures, that's a whole other
Oh,
level
yeah,
as well.
for sure. Or 8 billion.
Yeah,
No,
just an
I
extra
agree.
zero. It's not like it's that big of a deal.
Nah, nah. Yeah, and I tend to, when a company is very multi-layered, very multifaceted, there's a whole lot of moving parts, or there's a lot of other people involved, that's when I start to involve a higher level of accounting for me. For me, it's not always a dollar amount. It's more about the complexity of the company.
Yeah, yeah. It's
Right.
just hard to quantify that complexity. Every business is
Hmm.
slightly different. And so it's like one model that works for like let's just say again, just 5 million, because that's the
Yeah.
only way I can compare the quality. It's not going to be the same as another
Yeah.
company that's also 5 million. It's just you need some judgment, you need some consulting in there if you've never done it before.
Agreed. So I thought since I've not done history in a while, I would do a deep dive into the history of bookkeeping. Hope you guys can swim. It's riveting. Really. According to Wikipedia, the early development of accounting dates to ancient Mesopotamia and is closely related to developments in writing, counting, and money, which makes sense, and early auditing systems by the ancient Egyptians and Babylonians. By the time of the Roman Empire, the government had access to detailed financial information. Man, the Romans. Anyway,
Smart people.
really? Like, and then we got them. Later, double entry is attributed to the rise of Genghis Khan and later his grandson Kublai Khan. They were both deeply inspired by the Tang dynasty. The Tang dynasty was famous for their bureaucracy. But did you know, when the Mongols conquered a city, it was the accountants that went in first. They tallied up the wealth of the city. This is so genius. They tallied up the wealth of the city. Then they took 10% and used it to fund the troops. And then they used that now strongly supported army to conquer the city in its entirety. But the funniest part of it is that they did it in such a subtle way that cities would often encourage them to stay. Like, hey, you did a really good job, better than our king. You want to stick around for a while? Double entry bookkeeping played such an important role in assuring the Mongols were fully informed about taxes and expenditure. Who knew accounting was such a powerful tool? So now let's move to the 14th century, where the Vatican and the Catholic religion grew wealthy and powerful. We all know how it spread across the land, but did you know it was accounting that was the force behind it? The Italian banking centers of Genoa, Florence, and Venice grew powerfully wealthy in the 14th century. The Vatican utilized a German printing technology of money, which they used to churn out indulgences, also very famously known. Their operations recorded transactions, made loans, they issued receipts, and they also did some other modern banking activities. Giovanni de' Medici, say that 10 times or 3 times fast, introduced double entry bookkeeping for the Medici Bank in the 14th century as well. And by the end of the 15th century, merchant ventures in Venice used the system widely. Now, this to me is really cool. Printing started to reach a wider audience from here, and it was coupled together with widely available reading glasses that were made from Venetian glassmakers because medieval Europeans tended to be farsighted, and these glassmakers were making glasses that the Europeans could wear and read. Isn't that crazy? During this time, a close friend of Leonardo da Vinci, Luca Pacioli, published a book, not in Greek or Latin, which is what most books during that time were commonly printed in. He did it in a language that merchants understood well, in Italian. His book, Summa de Aritmetica, Geometria, Proportioni et Proporzionalità. Everything about arithmetic. I can say it in Italian, but I can't say it in English. Everything about arithmetic, geometry, and proportion became wildly popular, intentionally promoted by his friend Da Vinci. Pacioli's book explained the Hindu Arabic numerals. So those Hindu Arabic numerals are the numbers we use today. New developments in mathematics, and the system of double entry was popular with the increasing influential merchant class. His book remained in print for 400 years. That's insane. By the middle of the 19th century, Britain's Industrial Revolution was in full swing, and London was the financial center of the world. The growth of the limited liability company and large scale manufacturing and logistics, which is, during the Industrial Revolution, you had a lot of manufacturing going on. This now demanded technically proficient accountants because now the world was complex and global transactions were at a higher speed and the world was getting smaller. Now there was asset depreciation and inventory valuation, and there were changes in legislation such as a company law that was being introduced. As companies proliferated, the demand for reliable accountancy shot up and the profession became a part of the business and financial system. So much so that in July 1854, the Institute of Accountants in Glasgow petitioned Queen Victoria for a royal charter. This petition was signed by 49 Glasgow accountants, and they argued that accountancy as a profession had been existing in Scotland for a very long time, and it was a profession that was of great respectability. It was in the same level or at the same respectable level as a solicitor at the time. And they said that, hey, basically, businesses can't live without us. So the Edinburgh Society of Accountants adopted the name Chartered Accountant for their members, and Queen Victoria blessed them all. Yet another thing Queen Victoria did is she's like always on my mind. She does so many amazing things, a lot of terrible things, but also some really cool things. So now, with each episode, we like to share either books, tools, apps, platforms, or anything we think is a great next step and connector to our discussion. So if you like our subject matter and want to learn more, you'll have a great place to start.
So I don't have any books to recommend because, gosh, I cannot imagining recommending somebody to go read about accounting. I just can't.
Right. Oh, but it sounds like it would be amazing.
Yeah, I'm really not going to do that to you, right? But if you want a high level understanding of it, I'm sure, if you go to like LinkedIn Learning and a lot of like YouTube stuff, there are plenty of people out there who are more willing to explain business accounting 101 to you. The thing is, at the end of the day, you are a business owner. At least for our listeners, we typically speak to the business owners. You are a business owner. So unless you come from an accounting background or a finance background, I would say that you're probably much more valuable doing other things in your business rather than the bookkeeping and the accounting. So naturally, my advice is find someone you're comfortable with.
Yes.
Learn a little about reading both the balance sheet and the income statement. I know that, and Sevana, you probably get this too, but throughout my entire experience of XX some years, everybody wants to go to the bottom line. Right? Yep. Everybody wants to talk about a profit and loss and skip to the bottom line. But I will tell you that some of the most successful entrepreneurs I've known and worked with, they start with the balance sheet and they know that that's what's important. So if you don't understand a balance sheet, because that does get a little bit more of an accounting speak, then that is something that you want to learn and that's something that you want to focus on. Now, if you are incredibly uncomfortable with your knowledge of accounting and your instinct is to avoid it at all costs, and simply rely on your CPA, your accountant, your bookkeeper, or even your software, QuickBooks, FreshBooks, whatever other books there are out there to keep you in line and do it for you, that's a no. Just don't. Do yourself a favor. Do not do that. You have to own up to this part of your business. And if you avoid it like the plague, there's probably a reason why. So face up to your fears, buck up, and just do it. It is always going to be a partnership between humans and softwares, and the staff and the owner of a business to keep your accounting in line. Whether it's controls, whether it's process, whether it's anything, it's a partnership between your staff, your accounting staff, and you. You are the owner, you are in charge, and your life, your business is the one that's on the line. So don't feel bad about asking the dumb questions. Ask the dumb questions. Ask all the questions you want. Ask until you understand it. And any good CPA, accountant, bookkeeper, controller, CFO, accounting manager, anybody who falls into those roles can and will explain it to you if they're good at what they do.
Yep.
And if they don't, well, you know how to get a hold of us. We'll explain it to you. I mean, I'm serious. That's the one pet peeve I have is that, sometimes I think people in our field just aren't great communicators because, hey, we're really technically minded, we're really logically minded. So there's a few of
Yeah.
us who can actually explain accounting in a way that makes sense for business owners. And so I think
Mm-hmm.
that leaves a few of us who are business owners ourselves that happen to be in the field of accounting and finance to be able to
Mm-hmm.
be that translator. And
Yep.
so, yeah, I always make myself available to kind of help bridge that gap for any business owner out there.
Mm-hmm.
And I'm sure you are too, Savannah.
Oh, yes, for sure. But if you're really settled on doing your own books, please do yourself a favor and take bookkeeping classes, not QuickBooks classes, at least not yet. Take bookkeeping classes and understand books and the vernacular that goes with it, and then learn accounting principles. After that, get trained in QuickBooks. QuickBooks does offer training and classes, and there are a lot of opportunities local to you as well. Look into the local or county small business development center. They will generally have a schedule of classes, or your local community college as well. You're doing yourself and your business a huge favor. Now, if you don't have the time for any of this, and I'm telling you, it is imperative if you expect to have a good financial perspective of your company. If you don't have the time, just hire someone. It's the best decision you can make. Please join us for our next episode where we will share, drumroll please, a season 3 preview. Oh, I can't believe we're already on a 3rd season. It's insane. We'll share with you what to expect, what we'll discuss, and exciting news. Hold your applause. Please show us your support by following us on your preferred podcast platform, social media, and YouTube. We'd love for you to also share our episodes. All of our links are posted below. Until next time, mind your business behind your small business. Thank you. Goodbye.